Hey traders, Akil Stokes here of Trade Empowered, and happy Tuesday to you. So of course, welcome to another round of Technical Tuesday. Got some more time this morning, and want to put out a video. Uh, as always, going to hit you guys with a little, little technical, a little education in the beginning, and then syndicate members. I'm going to come back with some more trades on the radar. So what I want to look at today is let me turn my news stuff down. What I want to look at today is going to be let's see, what do we want to take a look at? Let's take a look at New Zealand dollar on the 60 minute, and we talked about this a little bit in last week's private client group meeting. Maybe it's let's go to the 4-hour New Zealand dollar. See if I can find this. Too many charts. Too many charts. NZDUSD. All right, 4-hour chart New Zealand dollar. Here's what we talked about in the private client group last week. Or in the live room, one to two, but we have a head and shoulders right here. You can see we have the left shoulder, we've got the head spiking up here, and we've got the right shoulder, and then coming back down, we have our neckline. So the question is, how can you trade this? I know some traders that trade the head and shoulders at the shoulder point. This could have easily been done. Looks like it maybe could have been a 26.18 opportunity on a lower time frame as well as we came up into the 618. But here's what I would look for now. And we went over this in yesterday's training about top-down analysis and I.P.D.E, identify, predict, decide, execute. The four most important letters you can know in trading. And the first thing you want to do is predict, where is this market likely to go if we go down. And thankfully I have these nice little DSR levels on here that gives me a nice visual representation. But the market is basically pulled the structure like a magnet. And down here where we have a major and a minor DSR level, well, this is our next magnet. So we would think that the market's going to come somewhere down in this level. If we break this recent structure. So the question is, how can we get involved? Well, easily. If we break this recent structure, if we get a new structure low, lower close, then that should signal a potential trend continuation type trade, which means we can wait for a retracement and then we can get involved on the way down. So just by having a firm grip of technical analysis, before the market even makes its news, or before the market even makes its move, we know exactly where targets are going to be, where stops are going to be, and where entry is going to be. So we can do some prediction. We can do something like this. We can take a ABCD pattern. Say if the market breaks this structure level, we'll probably come somewhere in an ABCD pattern. Let's say 82, 84, 84, 30. It looks like it comes in at a 618 as well. Comes in at a 707, so a little deeper than a 618. Now, if the market comes down here, if we complete this ABCD pattern, get this lower low, lower close, break a structure, we're most likely going to see a retracement back up to this structure level. That retracement back up is probably going to come anywhere between these structure lows and this 382. So now we have an entry point. We know our potential entry should be somewhere in this zone. Next thing to do is measure out stops and profit. Profit, we know we're taking it down in this DSR level somewhere. So if we get the lowest fill possible, we're looking at potential profit targets being about this much. Let me change the background color of that a little bit. Being about this much. And we know that if we want to get a one-to-one risk reward at that area, stops are going to have to be up here. So again, before the trade even makes this move, we already have a good idea of of what's needed. Now, if this is something that meets your risk reward level, then take it. If you're saying, well, I really need to get stops above here, this is the safest point above this previous structure, and it's going to inverse your risk reward, and you have two choices. Either you can not take the trade, or you can drag out these stops or these profit targets a little bit lower, maybe to the lows of this DSR level, in order to get that one-to-one risk reward ratio. Now again, we talked a lot about getting a one-to-one, how that's very important to me, but also remember that one-to-one is as a whole of your portfolio. So overall, the trades that you're taking, in your entire portfolio should overall meet one-to-one. Every trade doesn't necessarily have to do that. Now, I always teach my newer traders, have that one-to-one and how important risk reward is. But as you start getting better as a trader and you kind of know your numbers, you know what your win percentage should be, how often, trend continuation trades like this work, how often they fail. You get a better clue of how much you can stretch that risk reward out without it really hurting your overall account. So, head and shoulders pattern here on New Zealand dollar. Again, I don't particularly trade head and shoulders, but I will trade trend continuation trades. So if we see a lower low, lower close, if we come to a good level and we get a good retracement that meets my risk reward, well, I'm going to trade this and look for an extension downwards. So that's all. Hope you guys learned something from this morning's Technical Tuesday video. Syndicate members, hold on for 1 second. I'm going to be back with a potential at market Euro Yen cipher. I actually have my orders set on that already. I'm going to look at Aussie New Zealand, which I got from one of our syndicate members, and a possible 2618 trade on Euro New Zealand as well. So, trading world, have a great day. Plan your trade, trade your plan. I'll see you next time I do a video or a write-up. And syndicate members, just hold on for 1 quick second. All right, take care, traders.